Today's top picks guest says his firm's targets cash flow investments of all types. Rob Edel is Chief Investment Officer at Nicola Wealth Management, and he joins us from Vancouver. Good to see you, Rob.
Hi, Mark.
All right, give us a sense of your overall strategy here for clients.
Well, as you said, Mark, we try and build a diversified as possible portfolio for our clients. And, we look for asset classes that maybe a traditional retail investor can't get access to. And we've created our own pool funds that would enable us to go to managers as an institutional client. And thus we're able to get into asset classes like real estate, like infrastructure, private equity that, the average retail client won't have access to.
And is it important for you to diversify to the point where your asset classes are not directly correlated? So if the stock markets are taking a real hit, then you're protected in other areas?
Exactly. As much as possible. Obviously, we also want some exposure to the equity markets. And, when we look at the economy right now in the U.S., equities are something that we're a little bit more predisposed towards. So, we want exposure to equities as well, but we don't want to hold 60% of a client's portfolios in equities.
Now, Rob, you alluded to this idea of pooling the money of your high net worth clients to give them the opportunities comparable to institutional investors. Can you elaborate on that a little bit?
Yeah, so, traditionally, if you have a high net worth client, he may only have, a certain amount to invest, and if you're going, within that asset class and that allocation, if you're going to an institutional type product, the minimums are fairly high. So what we would do is take our clients and pool them all together so that we would be able to go to a institutional manager with a mandate and an asset class size that would be something that they would be able to manage.
Let's get to your top picks here. We'll start with Brookfield Asset Management. Now, we had a guest on Market Call, I guess it was Market Call during the afternoon yesterday, and he says that Brookfield is that they respect the management and everything, but they just find it too opaque, a company with all the different holdings and all the different Brookfield-type investments. So why do you like this company?
Well, we like the business. As much as when I talk about trying to get exposure to real assets, that's what Brookfield does. So when you invest with them, you get access to those real assets, infrastructure, renewable power, and property. But the other side of what they do is they manage assets for institutional investors. And that's a segment of the market, when you look at the bond market and how overvalued the bond market is, that more and more pension funds are looking to get exposure into this area. And Brookfield is going to, we see them increasing their exposure and revenue coming from that. So when you invest in the stock, you get that as well as the exposure to the real assets, which again is hard for the average retail client to get.
Would you say that there's an argument to be made to just invest directly in some of the Brookfield properties like infrastructure and so on, and office properties, is there a bit of a discount on the parent company because of the structure?
I think that if you can get access, and we do look to do that, that's true. But we're in the asset management business, and we think it is a good business, and to be able to invest with other companies that are able to grow that and have a growing revenue from that business, I think is an attractive investment. So I think that it's still attractive to us to put money in that area.
Rob, another one of your picks is West Fraser Timber. Had a tremendous 2012, and there are many who think that this role can continue for the lumber sector. You clearly think the same.
Yeah, absolutely. We see the U.S. housing market begin to turn up, and we're seeing increased home permits and starts. And I think you're looking at about 900,000 annualized in the U.S. right now. A normal level is about 1.5 million. Given the lack of building that's happened in the last few years, you could probably move beyond that. So we still see upside in housing and in lumber. And even though the stock has had a good move, I think for the medium term, this is a play that's going to take several years to play out. And given the supply demand dynamics in lumber, we think there's still good upside in the stock.
And just quickly, should an investor wait for a 10 or 15% correction in this company, WFT, or get in now?
It's always a tough call. If you wait for that pullback, you could miss the longer term move. I think always legging into a position is certainly a good strategy. But if you're in there for the long term, I don't think I would be too sensitive in when you get in.
And Rob, we'll wrap it up with the Methanex. I guess one of the key investment themes with this company is that its main input cost is natural gas, and the lower that is, the better it is for this company. Is that the way you look at it?
Absolutely. I mean, I think it's in North America, one of the other big investment themes we're seeing is low natural gas prices and looking at companies and industries that are able to benefit from that. And certainly in manufacturing, that you're seeing that. But companies like Methanex that benefit from the differential between the price of oil and natural gas. And Methanex has a number of catalysts where they're able to have good earnings visibility going forward.
Thanks for your time today, Rob.
Great. Thanks, Mark.
Rob Edel, he's Chief Investment Officer at Nicola.